Good evening, everyone. Time for another silver update. What you are looking at is a chart of the US dollar Japanese yen. Now, I just saw this myself. News just hit recently. I've just gotten home, and so I haven't had a chance to really look at anything. So this is just going to kind of be a live, take it as it goes. So we've got a drop that we had. If you remember the last update, we had a historical drop down, 4 point drop down below. Actually, it was 1995 support, but really when you look at the long-term chart, it was new all-time lows for the dollar yen. And just a few minutes ago, or maybe an hour or so ago, we got a big change in policy. So we'll look at the news article real quick here. G7 countries announce joint currency intervention. G7 countries agree on coordinated currency intervention to support Japan's economy. Washington, AP. Thursday, March 17th, 8:26 p.m. I'm assuming that's Eastern time, so that's about a half hour ago. Finance officials from the group of 7 major industrialized countries, note this is not the G20, it's the G7. So it's bigger than big, have agreed on coordinated currency intervention to support Japan's economy following a devastating earthquake. It will mark the first time the G7 countries have jointly intervened in currency markets since the fall of 2000. In a joint statement issued following emergency discussions, the G7 officials said that the United States, Britain, Canada, and the European Central Bank will join with Japan in a quote-unquote concerted intervention in currency markets Friday. I don't know if that's Friday Japan time or that's tomorrow. Let's take a look here and see what happened. So you can see, and I'm just looking at this for the first time, just like you are, that the dollar yen has rallied tremendously on this news. If you remember, this support right here was the breakdown of the carry trade. And we now have coordinated central bank intervention to reverse this trend. And I'm going to read something in a little bit here that will explain to you how to read markets, but we have to look at the facts of what has happened, and then we have to compare it to what they've said. So the facts are that we're looking at a chart that shows a coordinated dollar support. So let's at least against the yen. So like I said, I haven't seen any of the charts yet, so we'll just look at them together. Let's go and look at a US dollar Swiss franc. Same thing, intervention. And let's do a US dollar Canadian dollar, no move, okay. Let's do an Australian dollar Japanese yen, big move. Let's do a New Zealand dollar Japanese yen, big move, same move. Euro Japanese yen, huge move. Huge move. So, if you remember what we talked about yesterday, the way the carry trade works if we analyze what we're looking at here, we've got a rally of the euro versus the yen. So as of yesterday, the yen was strengthening in a tremendous move. And as I said, when you have what is called an outlier move, this move here is an outlier, a black swan, unpredictable move. And now today we have central bank intervention. Well, I can't say we know for sure because they said they're doing it tomorrow, but the markets are saying that the move they will make is to support the euro versus the yen. In other words, the intervention that they're doing is to coordinatedly sell yen. Now, how, it's boggling me a little bit, so if you can help me, maybe you can help this be sorted out. We've got joint currency intervention to support Japan. So how does making their currency depreciate versus all the other currencies support them? I'm not sure. So again, I'm just pretty much thinking out loud at this point because this is the first time I've looked at this information. It's earth-shattering. We may be looking at, if you remember, we had in 1985, we had a major concord on the dollar and other currencies, the Plaza Accord, and there are sometimes gatherings of these nations where they join together. Now you have to remember, you think about central banks, and to just look at the real big picture here. Central banks all hold reserves. Now they do have gold reserves because we all know that gold is ultimately the real money that backs everything. But central banks also hold reserves of each other's currency. Now this is important because you can't sell a currency unless you have a currency. So that's why last night I explained that what we saw here in this big drop and then this reaction here was obviously, in my opinion, was BOJ intervention, because this is someone selling yen. And this is actually the euro, but we could look at the dollar, yen. It's the same pattern. This intervention that occurred here and rallied to here, this is someone selling yen. So you can't sell yen unless you have yen. That's the bottom line. So that's why I speculated that this was BOJ intervention that occurred right here. Now, this coordinated intervention that we're seeing here in the same direction would appear to be more selling of yen. So, kind of counterintuitive, this G7 intervention appears to be a coordinated selling of yen in multiple currencies. That's the best I can do right now. Like I said, I just got home. I can't sort this all out. It's a lot of news. We have to wait and see if tomorrow what they say happens, or if this is just a market bet on what they think will happen and may or may not happen. So anyway, I wanted to segue into this book, which is Edwin Lefevre. I'm not sure how to pronounce it. I think that's correct. That's a pen name. But essentially, this book is the autobiography of Jesse Livermore. If you're not familiar with Jesse Livermore, he is, I don't think it's arguable, someone would say arguably, I don't think it's arguable. He is the greatest stock trader that has ever lived on the face of the earth. Now that's a pretty bold statement to make, and you can see some pictures of Livermore here. But you got to understand that Livermore was a penniless stock market ticker boy who started off, and I strongly encourage you to read this book. I have read this book, and there aren't many books. The Bible I have read multiple times, but this book, I can tell you I've read this book at least 10 times. This book is the Bible of markets. And if you ever pick up Market Wizards by I don't remember the author's name, but Market Wizards version 1, every billionaire that's interviewed in there, and some of the billionaires that are interviewed include Jimmy Rogers, Ed Seykota, and a large number of billionaires are interviewed in Market Wizards. They almost to a man cite this book, Reminiscences of a Stock Operator. This man is the greatest trader that's ever lived. And in this book, he documents his knowledge. It's written as fictionalized, but anybody who's traded knows that this is 100% truth. So the reason I bring this up is these are violent moves we're seeing. Let me grab the silver real quick. Silver's not really reacting to these violent currency moves. Let's look at gold. It's kind of a big yawn for gold as well. Just a general, here we are. And oil. Oil's still rallying. It has a nice breakout. So even though we had a big deflation play the one day, the inflation came right back. We had some nice reports. They managed to slip in a nice 30-year high in the PPI and a big CPI number that came in under the radar of this nuclear meltdown that we're worrying about. So we're still seeing moves to the upside in oil, but silver and gold, whatever happened in Japan is not a big factor for these two commodities. So I wanted to take this opportunity to read some of or one of the important entries in the autobiography of Jesse Livermore. For the people who, there's a lot of people who PM me and IM me and write me and say a lot of things about they're worrying about their silver and the trend and staying with the trend. And I'm going to do a search on Turkey. This Turkey story in this book is one of the best in the book, and I'm going to go ahead and read it to you because a lot of people have thanked me for reading to them. I'm not really sure why, but there may be some that don't have the ability, or there are some that don't have the time, or whatever the reason is. They appreciate that. So I'm going to go ahead and read this story because it's a story that explains to you why you can't jump out of a bull market and why you need to stick your ground and stay with your winning trade. So let's start this section. I'm going to link this so you can read this book. It's online. The whole thing is a PDF. It's one of the greatest investment books written, and you need to read it, but I'm going to read this to you. So Livermore says, most, let us call them customers, are alike. You find very few who can truthfully say that Wall Street doesn't owe them money. In Fullerton's office, and Fullerton was a bucket shop and then a brokerage that Livermore traded in. In Fullerton's, there was the usual crowd, all grades. Well, there was this one old chap who was not like the others. To begin with, he was a much older man. Another thing was that he never volunteered advice and never bragged of his winnings. He was a great hand for listening very attentively to the others. He did not seem very keen to get tips. That is, he never asked the talkers what they'd heard or what they knew. But when somebody gave him one, he always thanked the tipster very politely. Sometimes he thanked the tipster again when the tip turned out okay. But if it went wrong, he never whined, so that nobody could tell whether he followed the tip or let it slide. It was a legend of the office that the old jigger was rich and could swing quite a line, but he wasn't donating much to the firm in the way of commissions, at least not that anyone could see. His name was Partridge, but they nicknamed him the Turkey behind his back because he was so thick-chested that he had a habit of strutting about the various rooms with the point of his chin resting on his breast. The customers, who were all eager to be shoved or forced into doing things so as to lay the blame for failure on others, used to go to old Partridge and tell him what some friend of an insider had advised them to do in a certain stock. They would tell him what they had not done with the tip, so he would tell them what they ought to do, but whether the tip they had was to buy or sell, the old chap's answer was always the same. The customer would finish the tale of his perplexity and then ask, "What do you think I ought to do?" Old Turkey would cock his head to one side, contemplate his fellow customer with a fatherly smile, and finally he would say very impressively, "You know, it's a bull market." Time and time I heard him say, "Well, this is a bull market, you know," as though he were giving you a priceless talisman wrapped in $1 million accident insurance policy. And of course, I did not get his meaning. One day a fellow named Elmer Harwood rushed into the office, wrote out an order, and gave it to the clerk. Then he rushed over to where Mr. Partridge was listening politely to John Fanning's story of the time he overheard Keene give an order to one of his brokers, and all that John made was a measly 3 points on 100 shares, and of course the stock had to go up 24 points in 3 days right after John sold out. It was at least the 4th time that John had told that tale of woe, but old Turkey was smiling as sympathetically as it was the first time he'd ever heard it. Well, Elmer made for the old man without a word of apology to John Fanning, told Turkey, "Mr. Partridge, I've just sold my Climax Motors. My people say the market is entitled to a reaction and that I'll be able to buy back it on the cheaper. So you better do likewise. That is, if you've still got yours." Elmer looked suspiciously at the man to whom he had given the original tip to buy. The amateur, or gratuitous tipster, always thinks he owns the receiver of his tip, body and soul, even before he knows how the tip is going to turn out. "Yes, Mr. Harwood, I still have it, of course," said Turkey gratefully. It was nice of Elmer to think of the old chap. "Well, now is the time to take your profit and get in again on the next dip," said Elmer, as if he had just made out the deposit slip for the old man. Failing to perceive enthusiastic gratitude in the beneficiary's face, Elmer went on, "I have just sold every share I owned." From his voice and manner, you would have conservatively estimated it at 10,000 shares, but Mr. Partridge shook his head regretfully and whined, "No, no, I can't do that." "What?" yelled Elmer. Mr. Partridge said, "I simply can't." He was in great trouble. Elmer said, "Didn't I give you the tip to buy it?" "You did, Mr. Harwood. I'm very grateful to you. Indeed I am, sir, but—" Hold on. Let me talk. "And didn't that stock go up 7 points in 10 days, didn't it?" "Yes, it did. And I'm much obliged to you, my dear boy, but I couldn't think of selling that stock." "You couldn't?" asked Elmer, beginning to look doubtful himself. It's a habit with most tip givers to be tip takers. "Oh, no, I couldn't." "Why not?" said Elmer. And Elmer drew nearer. "Why, this is a bull market," the old fellow said, as though he had given a long and detailed explanation. "That's all right," said Elmer, looking angry because of his disappointment. "I know this is a bull market as well as you do, but you'd better slip in that stock of yours and buy it back on the reaction. You might as well reduce the cost to yourself." "My dear boy," said old Partridge in great distress, "my dear boy, if I sold that stock now, I'd lose my position. And then where would I be?" Elmer Harwood threw up his hands, shook his head, walked over to me to get sympathy. He said, "Can you beat it?" He asked me in a staged whisper. "I ask you." I didn't say anything, so he went on. "I gave him a tip on Climax Motors. He buys 500 shares. He's got 7 points profit. I advise him to get out and buy them back on the reaction that's overdue even now. And what does he say to me? He says that if he sells, he'll lose his job. What do you know about that?" "I beg your pardon, Mr. Harwood," said the turkey. "I didn't say I'd lose my job. I said I'd lose my position. And when you're as old as I am, and you've been through as many booms and panics as I have, you'll know that to lose your position is something nobody can afford, not even John D. Rockefeller. I hope the stock reacts, and that you will be able to repurchase your line at a substantial concession, sir, but I myself can only trade in accordance with the experience of many years. I paid a high price for it, and I don't feel like throwing away a second tuition fee. But I'm much obliged to you, as if I had the money in the bank. It's a bull market, you know." And he strutted away, leaving Elmer dazed. What old Partridge said did not mean much to me until I began to think about my own numerous failures to make as much money as I ought to when I was so right on the general market. The more I studied, the more I realized how wise that old chap was. He had evidently suffered from the same defect in his young days and knew his own human weaknesses. He would not lay himself open to the temptation that experience had taught him was hard to resist, and it always proved expensive to him, as it was to me. I think it was a long step forward in my trading education when I realized at last that when Mr. Partridge kept on telling others, "Well, you know, this is a bull market," he really meant to tell them that the big money was not in the individual fluctuations, but in the main movements. That is, not in the reading of the tape, but in the sizing up the entire market and its trend. And right here, let me tell you one thing. After spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this. It never was my thinking that made the big money for me. It always was my sitting. Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls in a bull market and lots of early bears in a bear market. I've known many men who were right at exactly the right time and began buying or selling stocks when prices were at the very level that should show the greatest profit, and their experience invariably matched mine. That is, they made no real money out of it. Men who can both be right and sit tight are uncommon. I found it one of the hardest things to learn. but it's only after a stock operator has firmly grasped this that he can make big money. It is literally true that millions come easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. Now it goes on, but you get the point. And I'm really talking about silver here. It's hard to sit tight when you're right. Now, this is a especially difficult market in silver because the spike is so near parabolic. But we're right, and you have to remember that 34, 35, 36, 38, 40, 45, 50 is irrelevant. These prices are nothing. It's going much, 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 much higher from here. So you have to sit tight. You're already right. Do you have a position? I bought here, 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 and here. If you sell everything you have, you no longer have a position in this market. You're going to be chasing it, trying to find a way to get in. So if you want to take Turkey's advice, you need to buy the dips and then just ride it out. It's hard to do, but 34 was a dip. We might get 32 again. We might get 30 again. We might get 22 again. But it's still a bull market. It's actually a parabolic bull market. And it's hard to not try to take a profit. But again, this is a bull market. So don't fight the tape. Buy the dip, look for a chance to get in, and keep on stacking. We'll talk to you next time.